Good morning. I have the good fortune of being a moderator of a panel of individuals who are far more qualified than me, so I'm going to ask them to join me. I suspect their names are all familiar to you. John Hourican, Group CEO of Banks of Cyprus. Phivos, you've just heard from, the General Manager of the Business Division of Hellenic Bank. Stephanos Kassianides, General Manager of the International Business Banking Business of Eurobank Cyprus. And my good friend Emilios, Kyriacou, Managing Director and Country Officer of Greece and Cyprus for Citibank. My name is Frank Miller. I'm a partner at Shearman and Sterling, and I'm a relative newcomer to Cyprus. I had my first occasion to visit the country when my firm represented the Co-op Bank in its recent transaction with Hellenic Bank. So I come with a fresh perspective, and I'm keenly aware that me and my colleagues on the panel stand between all of you and coffee. So what I'd like to do is say one or two words myself, and then the panel and I will handle a handful of topics, trying to build on what you've already heard. And then if there's time, and I hope there will be, we'll open the floor to some questions to make this more of a conversation. As I said, I'm a relative newcomer to Cyprus, but I did get a chance to make many visits to the country. And in between spending countless hours at the Ministry of Finance or locked in conference rooms with my clients and others, I did get a chance to go and see the country. And all of the things you've heard from the minister and others came across quite strongly to me. As a lawyer, much like the minister, I try and stay away from numbers. So I like to use words instead. And the words that came to my mind as I reflected on those visits in preparing for today were optimism and enthusiasm and even pride. As I spent some time in the country, those were the words that I was left with. So I didn't think the question was, is Cyprus engaged in a turnaround? I think the question is, what do we do now that the turnaround is happening? I'd like to add one last thought before I open the discussion with the panel. There's been a terrible, terrible omission in all of the positives that have been described, and it's one that I can speak personally to, which is the food and drink in Cyprus. And the most valuable lesson that I've learned is never drink any clear liquid after a meal in Cyprus. That's about the extent of my contribution. First topic I think we should turn to, and I think we've heard a lot about this, given the recent S&P ratings upgrade, the positive economic outlook, and we've heard a lot about that, the successful completion of the Co-op Hellenic Bank transaction, the recent sale by Bank of Cyprus of a very significant NPL portfolio. 2018 appears to be a watershed year for the Cyprus banking sector. I'd like to ask Stephanos if he could start us off by answering the question of what are the key priorities and challenges for the sector next as you look ahead through the remainder of 2018 and into the next year?
Thank you very much for Capital Link inviting us to attend this conference. Thank you, Frank, for introducing me and for the question as well. As all of us know, that credibility has been affected greatly in Cyprus, and we have to admit that restoring it takes a lot longer than to destroy it. I would take from the points that the minister said at the beginning of the event, that it's great news for everyone that the upgrading of our sovereign debt has taken place. But we have to make sure that we avoid the mistakes of the past. Delinquent loans have been kept out and have been on a reducing path, but we need to make sure that we avoid the mistakes of the past. We feel comfortable as banks in Cyprus that we have taken the measures, the internal processes and procedures, so as to avoid running to credit expansion without the necessary fundamentals. Credibility remains and should be protected at all levels. Management liquidity prudently. Happily, after what we have experienced in Cyprus, all of the banks in Cyprus enjoy healthy liquidity with loans to deposit ratios well below 80%. With interest rates in the Eurozone being negative, we need to make sure that we are not carried away and we manage our liquidity prudently. We should not forget our liquidity comes mainly from our clients, and we should take into account and protect our clients' deposits to avoid what Phivos said at the beginning that we have lived and seen, which was bail-in, bail-out, and all other consequences of the 2013 events. We need to continue to be customer-centric. We need to care for our needs of our clients. We see that cross-border, as we speak, banking is coming into our lives with the fintechs that are operating in a less regulated environment, trying to take part of our business. We need to continue to invest in technology and innovate. And finally, I would say that we as banks, we need to find new income-generating business. We need to deliver results for our shareholders. And we need to make sure that we continue to generate profits, and we need to invest in business that is not capital intensive. This kind of business can be seen from becoming a wealth management center in the region, servicing the newly established fund industry in the region, work closely with the government to support the shipping industry by accommodating transactional shipping business and making sure that we invest in this region so as to increase revenue streams, to be able, as the minister said at the beginning, to generate sufficient income so as to carve out slowly the restructuring of the balance sheet of the banks and of the delinquencies we are facing and experiencing in the market. So from me, I would say that we have 5 main areas we need to concentrate. The first one, credibility. The second one, manage prudently liquidity. The third one, remain customer-centric and finding new generating income business so as to deliver the necessary results for our shareholders.
Thank you. John, I saw you scribbling furiously as Stephanos was speaking, so either you have an additional thought or maybe something to add.
We can always learn from each other, I think, Stephanos. But look, I think the key thing about the sovereign upgrade is that we have momentum in the country, and that we now need to build that momentum to attract investors to try and continue to support the expansion of the Cyprus economy. It's all the things you mentioned are correct. You left out one very, very important thing, I think, which is capital. Liquidity is completely irrelevant if you don't have capital to deploy it. So, and I think what a lot of Cyprus banks don't do is focus on the capital sitting behind the risk. It's got really, running a bank's got nothing to do with the level of deposits you've got and the level of loans you've got. It's got more to do with how much capital you've got supporting the risk you're taking. And one of the biggest issues in Cyprus banking is that there's a lack of discussion about the capital supporting the risk. Now, I think since we started this journey, I think we've got 70% more capital against each unit of calculated risk in the Cyprus banking system, and that's a very positive thing for confidence, a very positive thing in supporting the growth of the economy, and a very positive thing in terms of the safety of the banking system. So, look, I think I don't want to repeat everything that Stephanos has said, but I think the sovereign upgrade is not an accident. A sovereign upgrade is a direct reflection of the efforts taken by policymakers, supported by good and sensible governance in the private sector, and a realization by the international community, and indeed the watchers of the international community through the rating agencies, that Cyprus has in fact behaved impeccably well during a difficult period of its own history. And I think we need to build on that. So it is our responsibility as bankers in Cyprus to make sure that the sovereign upgrade is not wasted, but is built upon. And that's what I would say in support of Stephanos' remarks.
And John, maybe we can stay with you and move just to, I think we've heard a lot of talk about the NPL issue that remains. Bank of Cyprus has just executed a transaction that I think may take us in a new direction in terms of that. If you could talk for a minute about that, and maybe we can get comments from the rest of the panel.
Sure. Look, we've been in a repair agenda for the best part of 5 years now in Cyprus. Our bank started, you've seen the country statistics, 27 billion of NPLs, down now to closer to 11, but we need to describe how that occurred. Bank of Cyprus started with 15 billion of NPLs, and we are, after the transaction, down to 5 billion covered by 50% provisions. So we've gone from net 10 billion to net 2.5 in a space of 4 years. That is going some. It's 3.2% of GDP per quarter for 13 quarters in reduction in our bank alone, plus a trade which then took another 20% of GDP off the banking system's balance sheet. Now, that said, we still have 5 to go. So, and because we've been shrinking the balance sheet, the numerator-denominator dynamics can be sort of unpleasant, because as you shrink your balance sheet and as you shrink your non-performing loans, you don't get the same sort of proportional benefit in your metrics. And that is an irritant to people like me who've taken 72% of the risk off the balance sheet and still have only halved the thing. We started at 63% non-performing loans and we're still at 38, having taken 72% off. So I do love numbers, Minister. Unfortunately, these numbers are not loving me. So look, I think the other thing is that we have reduced the banking system's balance sheet by the government taking on some of that risk. And we need to be careful that the magic trick of moving liabilities from the private sector to the state is not a done deal. It is the start of the finish. So when I look at what's left in Cyprus and I look at our own business, we have 5 left, 1 billion of which is actually cured already and sitting in the definition. We've got another chunk of 4 billion left after that, and that splits into even chunks of 1 billion each. We have plans for each of those. Maybe we'll do some more trades. The laws that were passed by the government and Parliament over the course of the summer are extremely important in strengthening the confidence to finish the job. So I think it is incumbent upon everyone on this panel and everyone who's running a bank in Cyprus, and indeed policymakers, to make sure that we are given the oxygen and support to actually now prosecute the agenda we created through the summer, which is, here's all the tools, go finish it. Because releasing the capital that sits against non-performing loans is essential to the provision of new credit, well risk supported in the economy. There's 150% broadly risk weighting against a non-performing loan. There's a 35% risk weighting against a mortgage in a household. There's 100% risk weighting against a corporate loan. Tying up the banking system's capital with continuing non-performing loans will destroy our ability to further turbocharge and support the economy. That's why we have to finish the job. Secondly, I think the attraction of foreign direct capital into Cyprus to support non-performing loans is a good thing for foreign direct capital and a good thing for Cyprus, but it does hand away significant profits that might have been made in the banking sector to another investor. So while I'm pleased that we were able to do a 5.7 billion contractual balance and a 3 billion balance sheet GBV trade at 1.5 billion, I am not pleased that I haven't been able to make the money I might have made had I held on longer to those assets for my own shareholders, but I am pleased that the country is able to demonstrate that sort of progress. And the last thing I'd say on non-performing loans is that the transfer of non-performing loans to the government's balance sheet effectively in the creation of a bad bank, while it does cleanse the banking system of those loans, we need to make sure that we prosecute the finish and the recovery of that money for the state. And I think that needs to be done in partnership with the private sector to keep the focus and effort on making sure that happens. So I think there's a lot of work still to do, and I think there's good momentum in what we've done so far on NPLs, and I think that we are on the cusp of the finish. But we need to make sure that we keep our effort and our momentum and our focus on the solutions there, and not sort of pat ourselves on the back and say, look how well we've done.
And in terms of this new legislation playing out over time, and maybe Phivos, you can address this as Hellenic's transaction involves a significant feature here. What are the things you're looking for to see whether this new legislation is really coming to life and being executed in a way that does create that value, either for the state, for the private, or the public sector?
Okay, a couple of points adding on John's comments and replying to your query is the fact that the mere sale of an NPL portfolio does not make the problem disappear. It makes the problem disappear from a bank's balance sheet, but it remains within the economy. So the legislation is effectively what you really need to get the job done, completed, and get it out of the system altogether. The fact that these loans are sold at a discount of their face value provides the new owners the ability to have the luxury, if you like, of closing these cases with a lower return and still making a profit that otherwise the banks would have made, and the shareholders of the banks would be more than happy to get it. So that's number one. Number two is the fact that the release of capital that was tied up effectively gives the banks the ability to grow their good book. And here we have to be careful, because growing our good book is a risk. It's taking on risk, and we have to measure that risk, and we have to measure the shareholders' return, and we have to price the risk correctly, which was something not happening in the past in a very structured way, and this is one of the reasons that led to the problems in 2013. So these are two very critical factors that we have to bear in mind. And the legislation is there to help both the banks as well as the government, who has a portfolio of bad loans sitting in its balance sheet, as well as the new owners of NP loans to recover what they have to recover.
So thank you for that. My observation, again, as an outsider and newcomer, is that the NPL situation can be a source of confidence building. Another area, just to move on the discussion, is something we've heard about already in terms of compliance and transparency, another area where you can really establish credibility and confidence. And it's a priority for financial institutions around the world. Perhaps, Emilios, you could address, from your perspective, where does Cyprus stand in terms of creating the right culture of compliance, the aspects of good governance that we're seeing evidence of that's boosting confidence?
Thank you, Frank. I think the overall recovery discussion that we have been listening since this morning resonates well with the overall AML and KYC infrastructure and efforts to improve in Cyprus, because compliance has become a central theme for the entire financial sector. This has been the case the last 10 years. 10 years ago, you wouldn't hear a Minister of Finance addressing an investor audience and referring specifically to the compliance of the country to AML and KYC, but this has become the case today. One has to read the front pages of Financial Times and the recent cases in Northern Europe to see how compliance has gained a seat on the table of any strategic planning, and therefore this is something to be considered and addressed. And Cyprus has taken decisive steps to get there. We are the largest U.S. clearer for the island, for the country, and we have been observing significant steps taken to improve the overall infrastructure and also the adherence to global best practices. In fact, Cyprus now ranks among the best globally in its AML structure and its AML compliance. We see that there is we observe on the island that there is a very senior sponsorship. We see the government, we see the regulator, we see the senior managements of the banks, commitment to improve and get out of the reputational issues that have plagued the island for years. We have seen commitments in terms of investments. We see staff added to the compliance department. So we see systems added. We see international consultants being engaged, and therefore there is a very visible and marked improvement in the overall addressing of the AML and compliance issue. It's no accident that Transparency International, for the first time, ranks Cyprus overall infrastructure on AML ahead of well-known Western economies like the US and the UK. It's the first time also that Cyprus is out of the list of high-risk countries of the United States Department of State in terms of referencing to high-risk jurisdictions. We see that the banks themselves have taken significant steps to de-risk their balance sheets from potential AML issues. International business have been downsized. We see the referral system being stricter and more visibly adhering to the international best standards. So yes, a marked improvement. Cyprus is definitely leading the way in terms of best practices on this sector, and we expect that should continue with the sponsorship it has. Thank you, Frank.
Stephanos, I saw you looking up at me. I think you've got something to
I
add
would
to
like
that.
to add to what Emilios is saying, that Manival, the permanent monitoring body of the Council of Europe, which has, as of October 2017, carried out 4 reviews of the system in Cyprus in this area, found that the Republic of Cyprus is in full compliance with relevant international measures, and that parts of the Cyprus legislation are in fact stricter than legislation in other countries. We expect a new review by Manival in May 2019, and we are pretty confident as banks that we've passed the new review with flying colors. And I have to say that the remark made by the Minister of Finance about opening an account in Cyprus, please indeed make a try, and most of the people that they try to do this, they will realize that the level of information they need to submit for onboarding and being accepted as a client is considerably higher compared to other jurisdictions. I see a few clients in Cyprus that they are smiling with in a way that confirming what I am saying, and that they are having trouble with us banking compared to opening accounts in other jurisdictions.
John, is it right? I can't just put down Stephanos' name on my bank account application and clear sailing?
I think it's very important we hit this issue on the head, because there is an in history stain on Cyprus's reputation as being loose in terms of how it has done banking in the past, and I think it is an unreasonably held stain. If you look, people talk about Cyprus as being a safe haven for Russian tax avoidance and indeed Russian money, and this is just nonsense. The Russian tax rate is 13%, Cyprus is 12.5%. Nobody does tax arbitrage for 0.5% anywhere in the world unless they're dealing in ridiculous numbers, and that's not the case. Secondly, 6%, if I speak for my own bank, 6% of our deposits, that's 0.6%, is Russian. We don't need the Russian deposits. They have been dramatically reduced. There is a very little reliance on this source of funding in the system in Cyprus. The number of clients that we have closed down and changed nature of relationships over the time has been dramatic over not just the last 5 years, but actually has been changing. And indeed, in the United States, where you have some fantastic pieces of Senate and Congress activity going on, we hear mention of names like Manafort and various others, and we hear Cyprus mentioned at the edge. Every time we investigate these things, we find that we've behaved properly and appropriately in the context of those names and those mentions. And I think it is very important that we don't become a story of when actually the story is not Cyprus. So I think just in this context, given we're in the United States and given we are observing the fantastic circus that sometimes is around Senate hearings, etc., I think it is important for us to touch on some of these things and remind you that Cyprus is doing everything it can to be utterly compliant and utterly conscious of the extraterritoriality of the United States when we touch dollars. And indeed, when we touch euros, which relate to clients who are in trouble in dollars. So we take this responsibility very seriously. We take it seriously because it's the right thing to do, and actually we take it seriously because we need to ensure that the country is not damaged by any form of reputational damage that can be caused by bad practice in any of the financial institutions across Cyprus. And we certainly take it very seriously in our bank, and indeed this is my number one US dollar clearer sitting beside me, and I need to make that speech in front of him, and hopefully he records it and brings it home. Yeah.
Well, thank you. To leave a
I would
little...
like, just
Sorry,
one
go ahead,
minute,
Stephanos.
Frank. What I would like to add on the deposit ratio made by John about the 6% deposits from the Russian market, I would like to say that in 2011, around 50% of the deposits in Cyprus were non-resident deposits. As of September 2018, this ratio has come well below 25%, so 1/4 is a non-resident deposit basis. So it's a verification that the banking system has changed dramatically as far as reliance on deposits and liquidity.
Phivos?
Yeah, just a closing remark. This is a classical case of tone from the top. And the top is not the top within each bank, it's the top within the country. Is the top within the country, is the top within the supervision of the banking system, is the top within each bank. All these matrix has created a high compliance awareness. And this has helped. We are not done yet, but we have covered enormous ground on this. And this is reflected on every bank's P&L, where the income arising from this sector has shrunk enormously. And this is the right thing to do.
I wonder if we can stay with that thought just as we close the topics and hopefully leave a few minutes for questions. And maybe, Phivos, if I can stay with you for a moment. Just if we were to look ahead, maybe I'm asking you all to look in your crystal ball, 3 to 5 years down the line, what would commentators look back to now and say were the key bits of either the public sector or private sector activity that really made the sustainable turnaround so remarkable for Cyprus? What do you foresee are the things that we ought to be focused on now that will be to our credit when we get that far down the road?
Not an easy question, but there are definitely lessons learned. The lessons learned effectively dictate the way forward. And the way forward is to maintain the public finances in order, to keep a balanced income and expenditure at government level, at state level, and this is something that we already observe. This is an extremely positive development. As far as the banking sector is concerned, my view is a back to basics view. Back to basics in the sense, continue doing what we understand, what we can manage, what we can control, and what falls within our reach. Credit expansion in areas and activities that are not so close to our culture, to our understanding, and to our behavior creates risk, which in my view is unnecessary and will not necessarily yield the expected return. So we have to stick to the basics.
John, how's your crystal ball these days? What do you look ahead to see?
I think the banks in Cyprus have two agendas. They have the repair agenda and the renewal agenda. And the repair agenda is underway, well advanced, but not yet finished. So we need to look back and say we finished the job on that. The second thing is on the renewal agenda, the business model and the paradigm shift is occurring quite rapidly in Cyprus and indeed across the world, that our customers are moving from a physical infrastructure to a digital infrastructure. So I think if we have invested well in the establishment of customer behavior movement from the physical to the digital, and we have focused on our business model to take cost out of it, and indeed to make sure that we don't allow sort of bad practices on lending and the usual stuff to come back into the market, then I think we'll have learned the lessons well. I think I'd agree with Phivos, back to basics is very simple. I have a phrase which I think is a very important one to repeat, which is we need to be ruthlessly simple about how we do our business. I mean, banking is the oldest business in the world. It's very simple in its construct, and it's made complex by people doing things badly. And what we have to try and do is make sure that Cyprus banks those that come to Cyprus for what they do in Cyprus, and banks those that live in Cyprus for how they live their lives. And banks will become financial hubs as we move forward, more so than just being basic financial institutions. Now, I think the issue for Cyprus is one of size. As we are held to the same account as the other 120 SSM-regulated enterprises, there's a level of basic infrastructure that a bank has to have in place, and that basic infrastructure is expensive to put in place. So we need to try and create a business that in 5 years' time is not just addressing Cyprus, but moving its addressable market to a wider one, which can make Cyprus's banking system relevant to a European banking union. Now, whether that comes in 5 years or 10 years, it has to come if we're to have Europe as a successful place where cross-border becomes a discussion of the past, and Eurozone becomes a discussion of the future, and shared infrastructure in jurisdictions which offer competitive, highly skilled workforces becomes serving more than Cyprus, but actually serving Europe. So I think we've got to be ambitious about what we want for Cyprus. We've got to be smart about how we create it, and then we've got to go and prosecute it.
Stephanos, ruthless, ambitious, smart, these things you endorse?
No, I have to agree with both Phivos and John that we need to stick to the basics and we need to keep things simple. There's no need to get into unnecessary risks. Obviously, the education of our existing clientele to move to the new era of digitization is an important factor that will assist banks to greatly reduce costs. As we saw at the initial presentation carried out by Phivos, it looks that Cyprus banking system is overbanked. We have a lot of work to do there. Regulatory issues that we have to address on a daily basis, the list is increasing, and it's a burden, I would say. I don't know how the other bankers they feel about this. So this will enable us to, if we keep simple, to add real value to our shareholders and avoid unnecessary mistakes. I would like to reiterate once again that credibility should be protected at all costs. It takes a long time and a lot of sacrifices to regain credibility, and it can be easily and quickly destroyed.
Emilios, do you want to leave us with a thought about what excites you about the country for the 3 to 5 year perspective, and then maybe we have time for a question or two.
I quickly say that just the problems are behind. I mean, NPL certainly remains there, but I think I agree with John. Top line, NIM, and operating efficiency should be the 3 pillars on which the industry focuses to get to the next 10 years.
All right, well, thank you all. I do see the clock has a minute or two left. If there is anyone with a question, you can shout it out. I can repeat it, and we can see if we get a comment. Question in front. There's a microphone, so just wait one moment.
I would like to ask the panel how they view the real estate market in Cyprus. I mean, we see an unbelievable number of new projects going on, which is a vote of confidence for Cypriot economy and the prospect. And this is good for growth. But are there any worries there? Are we going too fast? Will we manage to avoid the oversupply of new buildings?
So real estate, John?
When I start with that. So look, we've sold 667 million euros of real estate since the beginning of 2016, and 770 something of individual properties in that basis. We're currently marketing 1.3 billion euros of real estate and about this equal number of actual properties as well. The Cyprus real estate market is extremely liquid. If you look at last year alone, the number of transactions registered at the land registry, and indeed if you add on the companies that have transferred with property in it, Cyprus real estate market is something of the order of 6 billion of value and 24,000 individual transactions last year in Cyprus. These are huge liquid volumes. So there is a very liquid, active real estate market, the majority of which is funded and transferred locally using local money, albeit that we're seeing a large influx of foreign direct investment as well into Cyprus. And I think what you're getting at is some of these large buildings in Limassol that are selling for unbelievably high prices, and add that to the casino and add that to a variety of other things. Are we seeing either a two-tier market, or are we seeing an oversupply that ultimately will end in a problem for Cyprus values? And I think the answer to that is a little complicated but positive, in the sense that some of these larger, expensive per meter units in Limassol are being funded entirely with equity. They're not being funded with bank debt. The construction on these tends to be covered by the deposits received from overseas people wishing to own this real estate, and the banking sector in Cyprus is not exposed to that risk. And even if we are exposed to that risk, we tend to be exposed to the construction risk, not the sales price risk, and they're quite dislocated. So I don't believe that at this moment in time, despite some of the unnerving prices on some of the real estate in Cyprus, and indeed some of the wish to build large towers, and many of them in Limassol, I think at this stage it's under control because the supply is not being financed by the banking sector. So even if it were to come down in value later, you will not see the consequences of that in the system. You will merely see the loss of people's foreign capital in that number. And actually, if you look we monitor this, and I won't go into great detail, but we monitor this across the 600 parishes of Cyprus by asset type, and we're very clear what's going on across all of those things. And because we did our NPL trade recently, we've refreshed all this information. And actually what we're seeing is all markets, so whether it's Limassol or whether it's Larnaca or whether it's Paralimni or whether it's Nicosia or Paphos, we're seeing slightly different dynamics in each of those markets, in the commercial space and in the retail space or the residential space. But we're seeing mostly positive momentum. The place where we're seeing a little bit less momentum in sort of the second-hand market is in Paphos, but again, we're seeing that beginning to pick up in recent times. We're seeing an undersupply of property in Nicosia, which is why you're seeing more property actually getting built there now. We are certainly seeing things changing hands at high prices in Limassol, and we're seeing Larnaca starting to rise and come up. And indeed, with the building of the Ayia Napa Marina, which is Egyptian money in Ayia Napa, we're seeing the whole surrounding area property prices begin to be supported as well. So I think the answer is a complicated answer, but I think it's at this moment in time an under control positive answer, because foreign direct investment is bedrocking a future set of industries, which bedrocks property prices around those industries, and I think that's only positive right now.
I get the sense that we could probably talk about a number of other topics, but I'm keenly aware of the flashing light in the back and the coffee percolating in the lobby. So we'll leave it at that. On behalf of the audience, I thank each of the panelists for their contributions. Thank you all.
Thank you very much. Thank you for keeping the time. Thank you for a great panel. Now, I wanted to ask you, we have a hard stop at 12:30 because the president has a meeting in the afternoon he has to attend. So maybe in the interest of making sure we comply with the time, we continue with the program. And if anybody wants to have coffee is outside. You can go have coffee and come back in. If you don't mind, I think it's better that we proceed with the program and make sure we keep the time. Polis and Mr. Mikhail, what do you think? Okay, let's go for 10 minutes, have a quick break, but please, let's be disciplined to come back. Thank you.